So which one is easier to sell? Is it gold or is it silver? In today's video, we're going to look at selling both gold and silver and discuss some differences between the two precious metals to consider. We're going to look at a tube of 20 American silver eagles and this quarter-ounce gold American eagle, as both are great to compare against one another with their similar pricing. So let's go ahead and break that down today, coming right up. Today's video is sponsored by FE Battery Metals. There are big things happening in Canada with lithium mining and land purchases around those mines. Check out the full video for details. So between gold and silver, which one is easier to sell? If you want to liquidate or diversify your precious metals holdings, then you may be wondering which of the two, silver or gold, would be easier to sell during your time of need. Now, as you know, gold has more value per gram, per kilogram, per ounce, whichever way you're weighing your gold or silver, but that doesn't mean it may be easier to sell. Also, silver's got a lower price point, which does make it more accessible to the general population across the world than gold. But there are other factors that you should consider besides the fact that silver is cheaper than gold. Among the variables influencing the relative ease of selling silver or gold are, of course, the current spot price, the market demand, the availability of one metal or the other. Potentially, there's limited availability of silver, which may be artificially driving the price up. Could be the weight, could be the purity. There's many different things to factor in when buying gold or silver. And generally, gold and silver in smaller forms, we like to call that fractional gold, as we use the 1 troy ounce as that weight in both gold and silver that we get our spot price from. When we see silver's trading for $25 spot, which is more than it is today, same thing applies to gold. We're looking at that 1 ounce. So if gold or silver are particularly in high demand, obviously that also is going to influence which one will be easier to sell. And normally that's basic economics. If there's a shortage of silver, it tends to be easier to sell to a local coin shop who may be looking to bring in some inventory. If there's a lot of demand for gold, the same thing applies. Now, back to the fractional gold, because we are looking at the quarter-ounce gold eagle today. The easiest gold products, in my opinion, to sell are going to be the smaller ones. Even though it's easy to sell 1 ounce or even 10 ounces of gold typically to a coin shop without a lot of advanced notice. 10 ounces of gold, we're talking about $20,000. A lot of coin dealers are going to give you cash for that, or maybe, offer to write you a check right there. However, fractional gold does create a larger buying public, okay? Because more people can afford it. Therefore, you have a higher pool of potential customers to sell to. Now, the quarter-ounce gold American Eagles, they're a good balance between affordability and they're obviously instantly recognized, especially here in the United States. Quarter-ounce gold eagles do give you a little bit better premium over spot than that of the 10th-ounce gold eagles. And when comparing the price to purchase a quarter-ounce gold eagle today, it is relatively the same as an American silver eagle. Now, when it comes to which one is easiest to store, that's something that you might want to factor in. Silver is obviously going to take up more volume, more space, right? It's less dense and it's less valuable per ounce. So you're going to have 20 silver eagles here and you're going to have a quarter ounce of gold. That's a pretty significant difference in weight, 20 ounces versus a quarter of an ounce. Now, the price of silver is much lower than gold, so it may prove easier to sell because you can divvy it up, right? We're comparing a tube of silver eagles, but that's 20 ounces. And maybe you don't want to sell all 20 ounces. So a lot of people look at silver as a fractional option for gold. You buy 1 ounce gold coins, and then silver is, how you can kind of divvy it up into smaller transactions. But for those really looking to get into both gold and silver, I think the quarter-ounce gold eagle is a good starting point to begin stacking or investing in physical gold. American silver and gold eagles have been consistently in high demand. So that's another reason why I recommend. There's a reason they're higher premium, okay? They sell more of them. That means there's more demand for them. There's more buyers. And for the last 3 to 4 years, we have seen the premiums on both of these coins go up quite a bit. But right now, especially on the American silver eagles, they've come down, making 20 silver eagles more competitive with a quarter ounce of gold when it comes to premiums and the total value when looking at the gold to silver ratio, which is about right now 80 to 1, meaning 20 silver eagles is about a quarter of the value of 1 ounce of gold. And here you go, you got a quarter ounce. So it's a pretty good comparison. So which is easier to sell, gold or silver? Well, you're going to have more buyers, more potential buyers, that is, for silver, because the price of silver is lower than that of gold. And you can divvy up this tube of American Silver Eagles into, up to 20 different slices of the pie. Whereas with the quarter ounce gold eagle, which has about the same value, you've got just this one coin. So you're going to be looking for somebody who's going to have a $500 to $600 budget to sell the gold eagle to, whereas you may be able to divvy up the silver eagles. So I think silver is a little bit easier to sell than gold when it's in smaller quantities like this. But obviously, the larger the quantity of silver that you are looking to sell, so if we're comparing 10,000 ounces, let's say, of silver as compared to 10 ounces of gold, you're definitely going to have an easier time moving 10 ounces of gold in that respect. Plus, the storage. Never forget the storage. There's a big difference between the two. So what are your thoughts? Which one do you think is easier to sell based on your experience? I'd be happy to hear down in the comments section below. And let's go ahead and move on over now and talk about today's video sponsor, FE Battery Metals. They do have 3 exciting updates that I want to share with you today. Now, I first talked about FE Battery Metals back in April of this year as a highly likely candidate for acquisition, as this company is a very small cap lithium mining company with high quality projects in Canada's only active lithium mining district in Quebec right now. Speaking of which, as of today, there is only one lithium mine active in Canada and another in the United States, so just 2 in North America. And China does have control of about 60% of lithium production globally today in 2023, really making China the Saudi Arabia of lithium if we were to compare the 2 countries together, when looking at lithium and oil. Now, the thing is, there is plenty of high-grade lithium in North America. There's actually quite a bit of it here. It's just we're not really mining and producing it. That is, up until recently. Now, most, as you know, lithium does come from China or it comes from Chile, and China has purchased a whole lot of that land and even those companies that are operating there in Chile. So as the United States first attempts to go green with its energy production as well as greenhouse gas emissions and also secures its own supply chains, really lessons learned on the back of the last couple of years. With the pandemic, we saw those supply chain hits all across the world, which further, propped up inflation that we're witnessing today. So a lot of countries out there are really trying to get a hold of their own energy production and policy, and lithium is no exception to that. As a matter of fact, the International Energy Association, or the IEA, forecasts significant demand for lithium batteries by the year 2030, and an up to 40 times increase in demand for lithium by the year 2040. This has prompted new drilling in North America of land that was previously known to contain lithium, as well as multiple million-dollar land acquisitions as production once more ramps up here domestically. Now, corporations aren't waiting for governments, and there has been some individual corporation buying of lithium mines as well as production facilities, including a $650 million purchase of such by General Motors. That's right, a lot of the auto manufacturers are beginning to move towards more EV production. We'll touch on that here more in a minute. So FE Battery Metals is one of Quebec's largest landholders. Okay, that's the real big thing I want to emphasize to you here. Yes, lithium is in demand. It is. You really need both. You need demand for lithium, and you also have to own the land that lithium exists on, and that's the case with FE Battery Metals. And they have begun drilling again for results on that land that they own in this popular mining district as those land purchases continue to take place all around them. So you've got a very small market cap company in FE Battery Metals at only $10 million. That's right. They are really valued at just about $10 million. And these land purchases are being driven by positive drilling results. As we know, the proof is in the pudding. And so that's why drilling is very active right now on FE Battery Metals property. And you can check out all of their news releases on their website and stay up to date with all of the drill results, the grades, everything coming out on a weekly basis. So that's really the opportunity here. FE Battery Metals owns the land in the most popular mining district in Canada, where a lot of big acquisitions have taken place, even by individual corporations that aren't even waiting for governments to try to get control of the supply chain. Demand for lithium is driving these land acquisitions of these old mines. Production is ramping up as well as drilling. It's really a bit of a race, and FE already owns land, one of the largest landowners in Quebec, and so they are poised for a nice acquisition, okay? So lithium batteries charge much more quickly than traditional batteries. You probably already know that. They're lighter, which also allows for better economy, and they hold their charge longer at the same time. They're really just all around a better option for electric vehicles and, predominantly in demand for golf carts and other applications as well. The lithium demand versus supply forecast does continue to rise, and an additional mine will soon be opening in Canada as North American production really comes back to life in order to meet that demand we keep talking about. And this is supported by politicians in the United States as well as in Canada, as both countries are looking to secure additional energy supply options, and perhaps even with the right politician, eventual energy independence, okay, including lithium. So recapping all of the reasons that this opportunity exists is first, simple economics, right? Demand exceeds supply. And anytime that you have a situation where demand exceeds supply, there's going to be continued price appreciation of the underlying commodity, okay? In this case, lithium. So lithium really did spike up recently. It's kind of come back down, but that's leveling off, and the demand forecasts, show much more increasing demand than available supply going forward all the way out to 2040. So that's a good thing for the price of lithium. Secondly, that has already, prompted a lot of land acquisitions as people are trying to get in now and buy land that has lithium. Those prices continue to go up. We've seen multiple multi-million-dollar acquisitions around Canada's predominant mining location that we're speaking about here, and even up to $2 billion is the largest one. So that's really good news for a small cap lithium company that owns the land already and is currently drilling to show those results. Lastly, it's still a relatively early market. While it's no longer a secret that EVs are gaining in popularity, I mean, just look at Tesla and what's happened to its stock price. It's, gone way up. They did splits, right? Create more shares, lower the price, it goes up again. They did another split. So EVs are really popular, especially with younger people and younger investors. And modern EVs, to me, just simply fall out the price range of my family. I'm not really interested in them. However, that is slowly going to change over time with other people, especially as manufacturing expense begins to come down. With the auto manufacturers, they're able to produce them more cheaply, and then they're able to sell them more cheaply. They become more readily available, and we'll see increased demand for lithium as that continues to go on. Also, governments are still trying to, secure their own domestic supply chains, right? To no longer be stovepiped off by, events outside of their own control. And they do offer, here in the United States at least, some pretty nice tax incentives for both EV manufacturers as well as those that purchase the EVs. So that is also driving manufacturers towards the production of more electric vehicles, right? I mean, they get a tax break, and they're beginning to produce them a little more cheaply, and demand is still increasing. So I personally love my gas-powered vehicles, and I really have no desire for an EV at this time, but I'm also not blind to what is happening around the world. And so that is the update today. Once more, I recommend you conduct your own due diligence before investing. And remember that small cap stocks like this do come with a lot more risk than mid cap and large cap stocks that are, better positioned to absorb any kind of economic decline or bad news, so to speak. So I'll have more information on FE Battery Metals in the video description section, some direct links for those of you interested in learning more about today's video sponsor. And I hope you enjoyed today's video, which, we started out talking about which is easier, selling gold or silver, breaking down a few things to consider for especially new stackers that may be looking at the possibility of having to sell in the future. So I hope to see you again in a couple of days with another unboxing I have coming up of some 4/9 fine Silver Buffalo rounds. We're going to knock out that first tube of Silver Buffalo rounds here in the month of September. And until that time, my friends, keep stacking.
Thank you for watching our video. I hope you subscribe to our YouTube channel.